Oh, ladies and gentlemen, I hope you're excited. We got a big earnings report that just reported, just reported, 2 hours ago. Look, some of us have to work for a living. We don't have time all the time. It's going to be Salesforce, aka symbol CRM, you know 'em. Client relationship management. That's what it's all about. Anyways, oh look, the microphone's sitting on the keyboard. Whoops, that could have had a key that it wasn't supposed to. Salesforce, I was pretty excited going into the week, looking at these earnings to see what the stock might do. Initial reaction was quite negative. I'll tell you that right now. The stock dropped about 3% right after the earnings report. And since, we'll see where it ends up by the end of this video, but since we've recovered quite a bit, now we're talking about only about, a 1% movement downward at the current moment at 0.87 actually. So 0.78. It just flipped the numbers on me. I'm not dyslexic. 0.67. So things are getting a little more positive here. And I think it's because investors are digesting a little bit more, I think the initial surge of reaction is always going to be crazy. Then we start to digest the data. So let's take a look and see what they're all about. Again, this is a company I haven't really looked too much into the numbers before prior to really this week. And for that reason, I'm pretty excited to take a look and take a deeper dive because the numbers I saw were pretty enticing. So I'm going to see if these earnings can really replicate that. So first off, you know how it is. Kung Fu Panda right on the right there. Jack Black's, he's back. He's back. Back in black. Jack Black, he's back. CNBC is what we're using lately. Yahoo Finance can kind of sug on these. Seeking Alpha can sug on these. That's how I feel. So stay tuned. Obviously, we got the monthly recap of the portfolio and the dividends for the month coming up this weekend. So I look at these numbers. The expectations are pretty high when you look at the, what they were expected. Earnings per share, EPS $2.29 versus $2.26 expected. Not a massive beat. That alone, to me, I look at that and I say, okay, I can see why the stock fell a little bit because you look at the massive run-up the stock has had, and frankly, it's one it's unmatched. It's actually matched by several other companies. But anyways, it's a ridiculously high run-up for this company. And the only way, and I've talked about it before, the only way companies like that can continue to really react positively after earnings is what we call the trifecta. We must beat on earnings, we must beat on revenue, and we must beat on guidance. And sometimes it has to be a mega beat. So something like, let's say, NVIDIA wouldn't have gone up after earnings if they didn't have a mega beat. They beat on all aspects, but what if there wasn't a mega beat? They wouldn't have gone up. Anyways, back to Salesforce. I look at the revenue here, and this also was not a mega beat either. $9.29 billion versus the $9.22 expected. And I got to be honest, I actually did expect bigger numbers when I was looking into this company, and really giving an estimate for these earnings. I kind of expected bigger numbers. Not disappointed necessarily because they still beat, but I did think they were going to be larger beats. I genuinely expected a $9.5 billion line here in terms of revenue. But we'll see that. That does represent a 10.8% growth for them, which is obviously pretty nice. They did say here professional services revenue declined 9%. And this is really what interests me about the company is this net income line. And I wasn't familiar with their game, The company reported $1.45 billion in net income, and that compares to a loss last year of $98 million. So you see the company's really developing into a just a very a net income producing company. I don't know. They're producing profit and they didn't prior. So that's definitely what entices me when I look at that. And here they say Amy Weaver, the financial chief here, does say they're over the last 2 quarters, they've improved bookings growth. That's kind of what I wanted to show there. Next, we got to review the investor relations page. I look at this and what do I see? I don't know. I see a screenshot from Investor Day 2022. What? It's kind of lame. Scroll down here. I mean, it's kind of cool they've got tabs for everything, kind of, but it's not great. The stock information, it's decent chart. It's okay. I'll give them credit, but let's go to the press releases and take a look at this. I'm going to give this one, look, it's a very basic, very boring one. It's a 7-1 all day. This investor relations page is a 7-1 all day. Okay. So here again, we see some of these numbers. That 11% growth there. Current remaining performance obligations up 12% too, so that's pretty nice. For the full year, which kind of puts into perspective how big this quarter was, full year for 2024, this was Q4, by the way, $34.9 billion, which is up 11% year over year. Again, still double-digit growth is very nice. GAAP operating margin of 14.4%. Operating cash flow for the full year of $10.2 billion is pretty significant, 44% increase there. And here's a big piece of data that I think the investors are going to start slurping up. They've initiated a quarterly dividend of 40 cents a share. That's wild. You don't often see it in a company, and arguably, I would say Salesforce is a company that's relatively in its infancy. In terms of really just profitability, and you don't normally see this. They're still in a growth phase, and they've just announced a dividend. That's very shocking to me. These growing tech companies typically don't do that. You see, Meta finally did. They're still showing great growth, obviously, but they're a company that makes significantly more revenue, and they've been doing it for a lot longer, and they make a lot more net income. So that's just weird to me. I think it's obviously used as an avenue to get more investors into the stock, right? This is going to be available for more people. That some people only buy stocks with dividends. They refuse to buy a company that doesn't have one. That obviously opens the door for them for new investors. They also announced a $10 billion repurchase program. That's massive, obviously. That means they believe this stock is not quite, at an overvalued price if they're trying to buy $10 billion of stock back. Here we look at full year guidance. They are expected for the full year of 37.7 billion to 38 billion. Now this represents an 8 to 9% year-over-year growth. I think this is where some of the negativity lies, because this is going to be the first year where they're showing non-double-digit growth. And maybe that's why they put the dividend in there, to try to kind of subtle that, or make that a little more subtle of a landing. Now, operating cash flow here, I did want to highlight, because they're expecting 21 to 24%. Obviously, much larger than the, what you're seeing here. So, yeah, definitely nice. Yeah, I don't know what to say there, but it's been really good, and I think they're right. It's been a year of transformation for Salesforce, undoubtedly. You see, they're a company that has gone from no profit last year to a pretty good amount of profit. So that's definitely good for them. Some of the highlights here, again, they'll talk about this, the revenue there. Subscription and support, obviously the majority of their business. People who, not people, really, it's businesses that utilize Salesforce software. $8.75 billion, it's an increase of 12%. But then professional services there was only 0.54, which is a decrease of 9%. It's such a minor part of the business, it's not really relevant. It's all about subscriptions and support. The good thing for them, obviously, usually these businesses are buying annual subscriptions, is usually what they offer. It's their best plan. So it's something that they basically, they make the sale and they're good for the year. So that's something that is good for their business model for sure. Subscription models are very, very nice sometimes. But there's obviously the negative to it, to where it's people could drop off for a new platform at some point. But I guess that's the same with anything, right? For the full year, then obviously, there's the professional services was flat, so not really relevant. But here's the big bread and butter. The big bread and butter. Oh, baby, I love bread and butter. 12% up subscription revenue. Bang, bang, bang. So going to the EPS, the cash flow generated, obviously we talked about that. For the fourth quarter, is $3.4 billion, which is 22% year-over-year growth. Really nice to see. We're going to look at the balance sheet and see how that impacts them. they're not going to go too much into it. I don't know if on the conference call they really talked much about why they did it. Didn't pay attention to it just yet. Haven't had the recording come out yet. I will. I couldn't listen to it live. I was at work. I guess I probably could have listened to it now that I think about it. But initiated the quarterly dividend of 40 cents a share. So interesting there. They intend to pay the cash dividend on a quarterly basis going forward, subject to market conditions and approval. Forward-looking guidance, obviously, we looked at that. And again, this is for the first quarter, they're expected still that double-digit 11% growth. Pretty significant there. GAAP operating margin, they're not going to give anything for the first quarter, which is fine, but for the full year, 10% in a constant currency basis is interesting. So, yeah, that's kind of what we have to say there. I do want to go into some of the other data here, and obviously the balance sheet being one of them. There it is. Just to see, because obviously you see how they've transformed. You really see it from the balance sheet when you go from a not profitable company to having profit. You should see it mostly in the balance sheet, right? Kind of goes to show what they're doing. Now I look at this, and I love that it's a year-over-year. 99.8 billion versus 98.8 is obviously not very significant. $1 billion more in terms of assets isn't really crazy. Then I look for liabilities, and you know what? Not much of a difference here either. I don't really see much of an impact. Obviously, liability stayed flat, which is great, and they grew assets just a little bit. But again, they're still kind of starting that. I guess that that earnings train is a good way to say it. They're finally just now starting it, so wasn't really there the full year necessarily, but now they're there, and I'm interested to see what happens. So here's what I wanted to point out here is the valuation of the stock. Obviously, you see how it's ballooned over the last year or two. I want to bring up the valuation and see kind of what that's representing. So still a trailing PE after this move is going to be somewhere around 100. Depending on where it opens up, we're just going to say 100 to 110, around that range. And a forward PE ratio right around that 30 range is pretty good. Price to expected growth 1.56, price to sales 8.6. Now I do want to see where does that stack up really historically, because that's important. You see a PE ratio like this and you want to know where that stacked up historically. And frankly, it's pretty in line, right? That it's still a company that's, I mean, relatively new to making more significant revenues. So last year, not great in terms of EPS, so that PE ratio is much higher. So this 114, 110 range, it's kind of around where they've been historically. So it's definitely just really fair. I mean, it's decent value for what they've had. Now, it looks like they're on the uptrend, obviously. We'll see if that holds true. And if it does, this PE ratio will continue to drop. Now, what are my thoughts on the stock itself? Let me pull it up here again real quick, and I'll show you kind of that move we've seen. Let's just bring this over the last 5 years. We've seen highs, the high of the highs, and really that was 2021. We saw a massive dip. Wish you would have bought it back then, and then back up again. What are my feelings? Well, you know, obviously it's a stock at an all-time high. Is it the time to buy? I don't know. It depends on the quality of the company. I really do think Salesforce here is a very quality company. I look at the numbers, and I like the numbers. I like the forecast. I like the almost, right around double-digit growth in terms of revenue, and an ever-expanding net income line. Now, what I don't like is the fact that they lost that net income last year for some reason. Late 2021 to 2022, or really, I guess the full year of 2022, they lost it. What happened there? The prospects that I like is that this has the makings of a very, very profitable business. A subscription model in which they create the software outright and make edits to it, obviously. It's a low-cost business which you can charge and create a big, big return on investment, right? You can make a lot of net income with a service like that. And again, you look at a company, it's not the same, obviously, but look at what Microsoft does and how much their software makes in terms of just that net income piece of it. It produces a lot. Facebook produces a lot. Meta, sorry. The net income is out off the chains, as they say, off the chizarts, some might say. Do I like it at $300? It's up after hours now. Do I like it at 300? I really I don't, but I do. Okay, I don't think I would buy it at these levels. Um, but I think if you did, I think there is definitely a definite case for it over the long term. It's a stock that's not going anywhere. Companies are turning more and more to companies like Salesforce, especially Salesforce being one of the leaders in what they do and the services they can provide. My company being one of them, they provide a fantastic service and a suite of software. I think there's a great case for a buy at this level. I really do. I just personally don't love the valuation right now. The dividend helps quite a bit. I will tell you that helps quite a bit for me. Maybe give it some time and see if there's some sort of dip here that comes up once the Fed decides they're not going to be lowering rates. I'll see what happens, man. But that's what I got for you. Hope you have a good one.